Well, it gives me great pleasure now to bring on board Mr. Milind Karmarkar. He's one market guest I always look forward to interact. He is a firm believer in identifying mega trends, and in that he likes to buy market leaders with the simple assumption that you buy companies which have a dominance and a relevance, and if they are able to grow, then they act as great compounding machines. Mr. Karmarkar, fantastic to have you back, and thank you for joining us.
Thanks, Nikunj.
Nifty
Thank you very much. And
almost at 40,000, Nasdaq nearing an all-time high, no precedent so far. We don't know who's going to be the next boss of White House, and markets are celebrating as if the worst is behind. What is going on? Is liquidity blinding all of us?
Yes, I agree that liquidity is driving the market. Plus, there is always an exuberance whenever, these kind of, let's say, market expected results probably are showing. I know they are still not showing very clearly. But still, I think market is discounting the fact, I wouldn't say the rumor, but a possibility that Biden may come to power. And that is what is driving the market as of now. Going forward, let's see. I think this exuberance will die down after some time, and it will be back to real economy then.
The real economy is not doing all that well. When markets are flying as if there is no worry in the world.
Yeah, that's correct. I agree with you. But markets always discount the future. So I don't know much about the US, but I'm sure that everyone is probably banking on, we going past the pandemic and probably a vaccine being found or a herd immunity being created in the general populace. And because of that, probably market is factoring in that everything may come back to normal.
Are you a bit surprised with the kind of high frequency data indicators we've got, starting from auto companies to what even IT companies, or even for that matter the retail companies are indicating to us? The economy has taken a knock. Disposable income has been under pressure. Yet parts of the economy which are an indicator of mood and cash in hand, they are doing exceedingly well. Is this pent-up demand, or this is demand coming back for good?
It's like this, that I agree with you, because we have also been speaking to many of these companies in the consumption space. A lot of them have declared their results as well. And all of them are saying that, rather not all, but most of them are saying that they would be surprised if January to March quarter is not normal. In fact, one of the companies told us that, the kind of increase in sales, week on week they are seeing amazes them as well. So yes, probably people are, I wouldn't say throwing caution to the winds, but at the same time getting back to their normal routine and getting back to shopping or consuming as usual. And I think that is what is driving. So yeah, that's what it is. So I also do expect that January to March quarter for most of these companies will be normal. And I will be surprised if we don't exit the fourth quarter with a positive GDP number. Of course, there is a rider that we should not see a large second wave.
So what is the best way, according to you, to bet on the economic recovery? I know you're a big fan of consumption, but how about this time betting on cyclicals and industrials? Because if the economy comes back, that end of the market or that end of the economy also will have to do the heavy lifting.
So, Nikunj, that I sort of fall back on history quite a lot, because I do believe that history keeps repeating itself. So the only probably parallel pandemic or parallel situation which we had in history was the Spanish flu, which happened uncannily around the similar time a century ago, which was 1980 to 1920. So during that time, in fact, it was much more severe because science was not advanced so much. and nearly 50 million people died across the globe. But post that, if I look at the US economy, post that, the next decade was known as the Roaring 20s, because that was the time when US economy probably grew at one of the fastest in history. Personal incomes went up, consumption went through the roof. In fact, consumption drove the US economy at that time. There was, of course, finance became significantly cheap, and that is what drove the economy. So, but one thing you should remember, that during that time, even the industrials did pretty well, especially someone like auto companies did very well. So someone like Ford did very well. And of course, there was a reason for that, that affordability went up. As I said, per capita income went up. And during that time, interestingly, the stock market also went up 5 times. But during that time, insurance assets also went up 5 times. So, it was a boom period, and overall, the US economy did very well. Not only the US economy, even the German and the French economies did pretty well. And yes, like after every boom, there was a bust, but that was 10 years later. So that is what I expect, not the bust part, but the boom part, which can come in after this pandemic. So that's what I think.
Okay. Where are you shopping in this market? You're sounding bullish, you're optimistic, you're talking about historical comparisons. You're optimistic, and the historical comparison which you gave us and you shared with us talks about a boom period coming for certain parts of the economy. So are you putting your money where your mouth is? Are you fully invested?
I am invested 80%. At the same time, I'm still looking out for opportunities. It's not that there are no opportunities in this market. Opportunities continue to be there. And let me just clarify that when I see consumption, what I'm saying is that anything to do with consumption. So whether it's hospitals, whether it's pharmaceuticals, whether it's insurance, whether it's fast-moving consumer goods, whether it's retail, or whether it's consumer durables. So across the board, everything does well. But it is not only that. There could be some extremely, derivatives of this consumption theme. Let's take railways. So in case of railways, if Indian government pushes ahead and decides to electrify the entire railroad across India, which they were planning to initially, but currently the things are stalled. So there could be opportunities there as well. So again, going back to the US example, during 1921 to 1929, almost all the industries did well, barring a few, of course. But so I will put my bets where I understand things. And probably going forward, there could be more opportunities as well. And yes, basically it's, so when it comes to commodities, my views that frankly, I don't understand commodities. And that is the reason why I stay away from commodities.
One sector where some would imagine that the change has happened, and that's largely because of change in approach and change in human nature, is insurance. Insurance earlier, agent would call you, he would identify your need to buy insurance, and he would convince you to buy insurance to protect your family and your health. Now, you go online and you call the agent rather than the agent chasing you. So from being a push product, it has become a need-based product. You have investments in insurance. What's your underlying logic?
Underlying logic is simple, that currently the penetration of insurance is only to the urban areas and has not penetrated to semi-urban or rural areas. Tier 3 cities still look at insurance only as a savings product and not as a protection product. So there's a lot of opportunity which is there in insurance in the semi-urban area. Even in urban area, I mean, you will be surprised, especially when it comes to general insurance. I don't know whether I have spoken about this anytime, but so about a year back or a couple of years back, when we were looking at insurance companies, mainly general insurance companies, I was talking to my team about the opportunity and things like that. Despite the embedded values, especially in life insurance companies, the price to embedded value being pretty high. So I was talking to them about general insurance companies, and casually I asked him as to how many of you have your house insured against fire. And it would be very interesting. All of them are from an educated lot. And despite that, none of them had their house insured. House insured in the sense house insured for fire and burglary. So that is what it is. Unless and until this spreads across the population, I think the capacity which is there in all these, especially general insurance companies, has not been reached. There is still a long way to go, and I'm reasonably confident that these companies can grow anywhere between 15 to 20% for the next foreseeable future.
I can understand there is one general insurance company, but there are lots of insurance companies in the life space. LIC is going to go public. Why have you decided to move towards HDFC Life?
My portfolio. Otherwise, I never said HDFC Life, but because I normally don't like to take names. But basically, what I'm looking at is good, clean management, a conservative management, and where the focus is more on protection than on, or there is a, let's say, a very good balance between protection and unit. So that's all I'm looking at. So maybe if some other company comes up, I don't mind going ahead and buying that also. But in general, it's a big opportunity. I prefer to play it safely. So I would rather go in for someone who I think is a player with, who takes adequately caution and who's conservative.
How are you planning to participate in the digital economy? Some are saying buy IT companies, some are saying enablers, some are saying buy adapters. What is the best way to understand that if the world has got divided into digital and non-digital, and if the world is aligning towards digital platform, digital adaptation, and digital enabling, where are you leaning? Are you buying companies which are providing digital services or adapting digital services?
So it's both. We are looking at companies who are providing digital services, but there, though I must confess that I missed out on the software boom which happened in the last 3 months, as we were underweight software. But in fact, most of the software companies did say that they are seeing a lot of traction on the digital side or on the cloud side. But what we are looking at, besides looking at some of these niche companies, we are also looking at companies who are planning to go digital. So there could be a retailing company which wants to go completely digital, or if not completely digital, at least is willing to accept the fact that it's a click and mortar economy which will survive, and not only either only a click or only a brick. So that is the way we are playing it. So we would like to invest in companies who are looking at digitization in a very, let's say, very strong way. So companies in our portfolio also are looking at this opportunity. Tatas, for example, have are going in for a huge platform where most of these companies will join in. So yes, there is a mindset change across many companies, and they are focusing on going digital. And I would say that companies who are willing to accept the change and go and are going in for the digital economy as well are likely to do well, or digital platforms as well are likely to do well.
Allow me to come back with a quick question, which is when you say Tatas are adopting digital, well, investors cannot buy into Tatas. You'll have to buy a specific Tata Group company. How about talking about that?
Nikunj, I wouldn't like to take names, but I know one thing, that whether it's a retailing company in the Tata's portfolio, who was, I must say, relatively slow in going into digital, has accepted. But one thing I must give it to them, that they always said that retailing is all about being omni-channel. And that is what is likely to help these companies amongst Tatas, or anyone for that matter, whether it's Trent, whether it's DMart, you take any of them, as long as they're willing to go digital, they are likely to hold on to their, what would I say, hold on to their position in the market.
My idea is not to really put words in your mouth and get a stock idea. I'm just trying to understand your thought process here. I hope you'll appreciate that. The Jio launch has really disrupted the entire telecom. Now Jio is making strong partnerships with
Yes.
Facebook, with
Yes.
Google. They are coming out with Jio Mart. The experience of Jio Mart is that physical retail becomes online retail. That could change the disruptive nature of a Trent, or even for that matter a DMart. Are you cognizant of what Jio platforms and that marriage could do?
We are very well cognizant, since we are heavily invested in retail. We keep taking a stock of our investments, and we keep taking a stock of what is happening in the sector. I do appreciate what Reliance has been doing, and they are doing it very aggressively. But as I said, that having said that, the other players are also not far too behind. And ultimately, it's, as you said initially, that it's about creating your brand, and B, giving differentiated service. So as long as you are able to do that, I don't think there will be any issue in terms of growth, because Indian market is huge, and there is place for everyone, as long as you are willing to change and you are willing to, let's say, go omni-channel. If you are willing to do that, then not only you will survive, but you will thrive as well, despite whether it's Jio or whether it's anyone else coming into the market.
In today's disruptive world, if I look at your portfolio positioning, it hardly changes. Now the world is changing. The world is very dynamic. Trends which were multi-year trends have become, yearly trends, and yearly trends have become quarterly trends. What gives you the conviction to buy the same stocks and keep on sitting on them when the world around us is changing?
So my focus, frankly, is on a very long-term view. So in the longer term, I do expect the Indian per capita income to grow significantly. Not that it has not grown in last 3 years is definitely not a cause to worry, and because the circumstances were that. So unless and until you believe that India is going to be a basket case, then it's a completely different story. But if we have seen last 30, 40 years, Indian economy continues to grow. And as I said, that if we put something, if we look at the parallels in history, I am reasonably confident that the next 7-8 years could be very good for Indian economy, could be very good for increasing per capita income, which will drive the economy like it drove the economy in the US. So US predominantly is driven by consumption, and I don't see anything different happening in India. So of course, besides consumption, we are also looking at outsourcing, because outsourcing, I think, is a big opportunity, especially after the trade differences with China. When we talk to most of the companies, they do say that India is not being looked at alternate source, but India is being looked at additional source. And because of that, there are a lot of opportunities being created within that space also. So there could be some companies in the market cap range of 2,000 to 3,000 crores, which could become 4-5 times in next 5-6 years.
Mr. Karmarkar, closing questions. You missed on IT, but you have been long pharma for a while, and I'm saying this because I've interacted with you for more than 20 years now, and you've been a big votary of pharma. But the pharma landscape is changing very, very rapidly. How are you investing in pharma? which way are you moving? Are you buying US companies? Are you buying domestic companies?
Right. I didn't speak about Pharma, but I have been liking Pharma for a long time. And I have a couple of stocks in my portfolio which have done very well for us. But we also see Pharma, basically the growth being driven by three legs. One is the US, the second is rest of the world, and third is India. Now, if you look across the globe, what is happening is that we expect that there will be a significant change in the attitude of governments. So governments will start spending more on healthcare, and that is what will drive the growth in pharma across the globe. In India specifically, what we think is rising per capita income will increase the affordability of medicine. In addition to that, insurance will also drive people to spend more on healthcare. And that is the reason we see a very good growth in pharma for a very long period of time.
Well, Mr. Karmarkar, really appreciate your time. So glad you could find time to interact with us. Here's wishing you and your family a wonderful, happy Diwali in advance. Have a safe Diwali and stay safe.